Hey everyone, it's Gunnar Greenlee with C3 Real Estate Solutions. As many of you may know, my real estate partner Matt Schaub and I like to put out a lot of content, whether we're marketing for a home that we have listed or just kind of educational topic related videos. We do a lot of that for, just to get out there to show you guys kind of about real estate and kind of educate and, of course, market. And I've been trying to get more content out there and have more time to do some. So I thought I would go ahead and start with a market update video. And so today, that's what I'm going to do is the general market update for November 2020. I know a lot of real estate agents do their market updates, and some of them can be a little boring, giving numbers and stats month after month. I'm going to do that, but I also want to kind of tie it in to the real world, see what the numbers mean for Denver and Northern Colorado's real estate market. So now let's get started. I might be a little bit crazy doing both markets, but I do work in the Denver metro area real estate market as well as the Northern Colorado Front Range market. And they are two distinct markets. Now, I live down in Denver, so I do work the Denver metro area a lot. And then I also have my teammate Matt, C3's headquarters, my offices are all up in Northern Colorado, and so I'm up there all the time as well. I'll cover both of those markets in this video. Even though the two markets do generally follow the same patterns, if Denver numbers and data are going up or down, generally Northern Colorado's will also be going the same direction, maybe just not as exaggerated as Denver's numbers, but for the most part, Northern Colorado and Denver are following the same trends. So the Denver metro area, that's going to include multiple counties such as Arapahoe, Boulder, Broomfield, Adams, Clear Creek, Denver Douglas, Elbert, Gilpin, Jefferson, and Park counties. And the Northern Colorado Front Range counties are going to be Boulder, Larimer, Logan, Morgan, and Weld counties, as well as Yuma, Washington, Phillips, and Sedgwick. For the Denver metro area, I will put detached single family residential homes, which are just, your normal houses, and then attached single family residential homes, which are townhomes, condos. Their data have different, numbers, but I'll put both of them up, kind of just go over the attached more closely. So new listings in November was down 5.6% compared to November of 2019. So not as many, homes coming on the market, not as many people listing their homes as this time last year. Under contract pending. So homes that had an offer put on it and are expected to close, that was up 14.1% this year compared to November last year. Closed homes were up 15.2%. Median sales price was up 13.8% at a median sales price of $495,000. And then the average is up 14% at $747,000. Days on market. So it's actually down 35.9%. So homes are getting listed and staying listed on the market for less time than November of last year. So average days on market is 25 days. And then if you look at the Northern Colorado Front Range market, it's, going the same direction for the most part. The median sales price for Northern Front Range is $436,000 and the average at $534,000. Days on market is also down at an average of 58 days. So not that many new listings coming on the market this year compared to last year. So with a market that already had a very low inventory, with COVID in the winter, months coming up, we're having an even smaller inventory pool, with less days on the market because the buyers are out there and it's competitive. So Showing Time is a software that agents across the country use to set up their showing appointments for homes. And this Showing Time gathers a lot of really good data. So showing activity remains higher than the same period a year ago across most of the country. That's suggesting that a strong buyer demand is likely to continue into the typically slowest time of the year. With inventory remaining constrained in most parts of the country, sellers continue to benefit from these tight market conditions. Also, according to Bloomberg, between the months of April to October of 2020, Denver was ranked number 8 on the most moved to city during the coronavirus pandemic. So that's based off of zip code changes of 174 million LinkedIn members. So, yep, demand is really high right now. With COVID and the winter months coming up and the holidays, you'll already have that low inventory. You can imagine how competitive it is out there looking for a home. As a buyer, you need to have a competitive offer in order to compete in this environment. Some things you want to think about to get that kind of offer that's going to be accepted. There's lots of different things to do. One is offering, to pay more of the seller fees. Those can add up. So owner's extended coverage. And if you don't know what some of these things are that I explain in this video, feel free to reach out to me. I'd love to help explain a little bit more in detail anything that I talk about in this video. But offer to pay for owner's extended coverage, seller transfer of title fees, closing services fee, which is usually 50-50, buyer and seller pay that fee, offer to pay the full thing. These fees add up, and it could be the difference between a winning offer and a losing offer. One of the most important things to think about is having your loan ready to go. Sellers are going to be wanting offers and buyers that are serious about buying. So if you have your loan ready to go, wrapped up, what the lender is going to qualify you for, that's a big thing for sellers. When you send an offer, have your lender letter ready to go and send that with your offer. That could be the difference between you and another offer. On the seller side of things, as the winter and holiday season approaches, a lot of sellers are deciding to wait until the spring to list their home, or withdrawing their home from the market until the holidays are over. And here's some good reasons why you might want to sell now or not pull your house off the market right away. There are tons of active buyers out right now, and with historically low interest rates, those buyers have more purchasing power. And you might ask, who's crazy enough to buy a home in the winter or over the holidays? And the answer is the serious buyers, the ones that are wanting to buy, ready to buy, and serious about buying. Those are the ones that are looking right now. Another great thing of selling in the winter is holiday decorations. People love holiday decorations. They love coming to homes. When they go into your home, it feels cozy. They can imagine themselves, their family eating dinner, spending time with each other. And, it just looks good. It's a great marketing strategy, and people love it. And again, demand is surpassing supply, so that means you're in the driver's seat, and that is never a bad thing. Talking about historically low interest rates, rates have remained very resilient, even with all these economic headwinds coming their way. Comparing to last week, 30-year fixed mortgage rate increased just 0.01%. On a year-to-date basis. That rate is still 1.37% higher than it was in the opening of 2020. The housing market continues to surge higher and support an otherwise stagnant economy that has lost its momentum over the last couple of months. These consistent low rates are keeping the buyers out there looking for homes, and it doesn't appear to be changing anytime soon. In their weekly application survey, the Mortgage Bankers Association had this to say: the ongoing strength in the housing market has carried into December. Applications to buy a home increased for the fourth time in 5 weeks as both conventional and government segments of the market saw gains. Government purchase applications rose for the sixth straight week to the highest level since June, perhaps a sign that more first-time buyers are entering the market. So just goes to show, demand is still out there. That's not going away anytime soon. Looking at data, jobless claims has jumped to their highest level in 3 months, likely putting additional pressures on Washington to get their stimulus deal done sooner. Retail sales fell for a second straight month and missed expectations significantly. But on a happier note, the housing market continues to drive the U.S. economic growth. Housing starts and building permits both beat forecasts and pointed toward relief in some inventory-strapped markets. So closing out the year, it sounds like things are slowing down a little bit. Demand is still surging, though. That's not going to change going into 2021. Inventory is low, and once the spring and the winter months, once we get through these holidays, things start changing. We get some more people out there, more homes for sale, more places for people to move to. I really appreciate you guys watching this video. I hope to do more of these. Hopefully I provided some knowledge to you guys, something that you can take away. My hope is to provide you guys value in any way I can. Feel free to reach out and let me know if there's anything you want me to cover or talk about, or just any questions. You can just contact me personally. I'd love to answer or talk you through any questions you have about real estate, the market, or if you just want to call and chat, let me know. I'd love to talk to you. So I hope you guys have a great Christmas, a great New Year, happy holidays, and I look forward to seeing you all in 2021. Thanks.